All right, all right, all right. And as always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely. It is a super Saturday. Absolutely, it is. It is February 15th, 2025. All right. Got some things to go over, whether it's dealing with trading and outside of trading. Today, we had a game today, coached again today, and uh, lost a heartbreaker because we played well the entire game, with the exception of the last 60 seconds, the last minute of the game. The opposing team made two buckets. The opposing team's crowd started getting loud and wild, and um, my team self-inflicted. We just lost our composure, and it's okay. But they absolutely played their best game in a losing effort. But we got better on all aspects of the game: offense, defense, and free throws. So I'm very, very proud. I'm very, very exceptionally proud of my boys and the way they play. I know that we're going to be a force to be reckoned with when the playoffs start. Yeah, we're going to be dangerous from day one to now. We have improved and gotten better, and I know it's only up from here. And they are going to be absolutely ready and prepared for the playoffs. So shout out to the Miami Hurricanes, D3 Miami Hurricanes. Very, very proud of these young men, these gentlemen, and they are maturing and blossoming into their roles and becoming a better basketball player. Okay, we are definitely going to be forced to be reckoned when it comes to the playoffs. All right. So other than that, didn't really had it like a up and down neutral week. Um, so we're starting over from scratch, growing a baby account, and so with this one, it's taking the same exact trades for the same exact reasons, and it's off of divergences and changes of character. Off of divergences and changes of character. That's all I take trades off of, and I have several different templates based off of divergences. But I'm going to be taking it based off, a certain couple of different things, to based on depending on how the market develops and creates, dealing with that divergence and change of character. So that's what I do. Divergences tell you the story of what's about to happen next. Okay, that's what happens. So we're simply looking at gold, right? Looking at gold, and this right here is obviously a divergence and a change of character. Divergence, the market change character right here. Let's see. Uh, Let me see. Hold on. I could pull it from right here, probably. Yeah, you see how this is slanting from here to here, slanting upward, and from right here to here on the RSI slanting lower, which makes this midpoint right here a change of character. Okay. And I'll definitely see this going bullish, because you want to know why? This right here is a redistribution. You got a bearish engulfing candlestick, right? And it happened before the change of character. I see the market going bullish from this level. Why? And on the M15, this is a bullish divergence and a change of character. Market slanting lower, price change of character right here. RSI slanting upward. Got the change of character, got your reaccumulation, right? So definitely when the market opens back up, I'll be looking for buys from this particular area, and to uh take a partial right here. This would be my TP1. So I'm going to simply erase this because this is no longer acceptable. So I'm telling you, I'm looking at divergences. Divergence tells a story. I've been attempting to take other trades outside of divergences, but I've had my success with divergences. Divergences and these pivots in the market tell a story. They tell the story. So this right here is going to be the wick right here is going to be TP1 for me, roughly about 2,914 32 cents, $2,914.32. When I go to a lower time frame and look for confirmation based buys on gold, because you can see already how the market diverged and changed character. Can't really see it on the M15, but right here in this area, you can see it on the M5 right here. The market diverged, slanting lower. Right here, slanting upward. This midpoint right here, the last engulfing candlestick that broke this low, led to this low. This supply zone got taken out. So guess what? That's a change of character. Boom. So now that's a change of character. So now my anticipation is this. Let me see if the market wants to come back and refill this imbalance, create a distribution, redistribution to refill this imbalance, create a higher low, and then go back up and accumulate off of this level, accumulate, reaccumulate, break the structure, and create a new high. So now what do you have is this? What you have is this low has led to this high. So in between this low and this high, the buyers can stop this low from being broken in a demand zone. So this is what I'm going to show you. Right here like this buyers, if the buyers want to simply take over this market, they cannot break below this wick. Okay? They cannot break below that wick. They have to prevent. This is what you do. In order for this to still be a buy, this has to come down, distribution, redistribution, and want to create a higher low somewhere in this particular area and not take out this wick, because this low caused a change of character and led to this high. Now the market may look to do what? Refill this imbalance. But be patient. Even if the market decides to U-turn from where it's currently sitting at, take out this high, create a new one, this imbalance still has not been filled. It still has not been filled. So we got to be cognizant of that. I'm not interested in looking to take the market while it's currently where it's sitting at. So I'll let the market unfold, come about. And what I'll do is this. I'll simply put a horizontal ray on this demand zone like this and put a 5-minute alert, because on a 5-minute time frame, and then say, hey, this is a M5 demand zone, and create it just like that and leave it just like that. That way I don't miss out on the opportunity of a trade. All right. That's the way I don't miss out on the opportunity to trade. All right. So that's basically it with gold. This is just a sit and wait. So you got this low and this high, the beginning of the impulsive move, the ending of the impulsive move. Okay, now on the lower time frame, obviously it's creating lower highs and lower lows. The lower the time frame, the more often the trend changes. The lower the time frame, the more often the trend changes. So you can clearly see how the 1 minute, the M1 is bearish. You got a high, got a low, lower high, lower 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 low. Like you clearly see this bearish, right? But the lower the time frame, the more often the trend changes. So bam, we have a change of character, right? You got the market, this impulsive move also took out this high right here. So not only did it change character, it also took out this high. So you put your cursor right here, you can see how this wick came up right here. So now I'm looking for the market when the market opens up, I'm looking for it to retrace, accumulate off of this level with confirmation, and then go bullish and start this bullish move. So then you have you have a low, a high, future higher low, wants to accumulate, reaccumulate, break structure, and create a new high. That's why I love divergences. Divergences. And like I said, I'm really more keen to looking at that setting up because we have an unmitigated engulfing candlestick right here. And this right here, like I said, is a divergence and a change of character on the 1 hour. This is diverging. And this is the change of character right here, bearish change of character. It's the last area that accumulated, broke this high, went up there, right? So this is a change of character area, change of character below. So now what do I see as far as Elliott waves and all of that? Okay. This would be, to me, this would be a B C correction. Because why? Because after this divergence and this change of character, the market did not come back and create a wave two. So what I'm saying is this: the market didn't do this. Uh, the market didn't do this. Hey, wave one, wave two, wave three. So what I see right here that the market created based off of Elliott waves, the market created it diverged, it changed character, it created a B, C retracement. Now, to get from this high down to this low, what happened? I see another. How many waves did the market produce from this high to get to this low? That's the question. How many waves did the market produce in order to get to that high from this? So let's see. Because 3, 4, and 5 is down here. See, I believe it's an ABC as well. Yeah, I'm gonna say this is an ABC as well. Yeah, this being an A, this being a B, and then now it's forming C. So now maybe the market wants to perform a bullish um flat pattern, a bullish regular flat pattern. So what I'm saying is this: no, I do not use the fibs, but I'm going to show you as far as using it as an example on this particular live stream. So you pull this fib from this low to this high. And what happens is this: you got an ABC correction, ABC correction. The market reacts and creates an accumulation or bullish divergence and change of character. 78.6 minimum, maximum 90% retracement of this wave. So the market pushed up from here, from this low to this high. The market then did what? Retraced at least 78.6 minimum, maximum 90% of this up wave. And then we're looking for the market to do what? Create a wave 1, 2, 3, 4, 5. So I'm looking at this as of right now. I'm looking at this as a regular flat pattern. I don't know what's going to happen. I don't know what's going to produce when the market decides to come out. Market decides to open up. When the market decides to open up, come Sunday, tomorrow. So we'll see what's up. All we can do is see. All right. So I'm looking at this possibly being a regular flat pattern. You have the change of character. I mean, you have the redistribution right here, this engulfing candlestick on the inside of the change of character. It happened before the change of character and not after. So, like I said, when the market opens up, I'm looking for it to go bullish with confirmation and to at least minimum take it back to this level right here, at least to this wick, because it's an area of interest where the sellers can come back in the market. So I put this on a 1 hour time frame. So make this a 1 hour alert. So I'm looking to push the market from this confirmation buy right here, stop loss below here, and push this up here. That's what I'm looking for. That's what I'm looking forward to. Just got to see what the market does. Divergences tell the story. Divergences tell the story. So let me tell you this. You can see on the inside, I'm going to tell you this. You can see on the inside how this is a reaccumulation that led to this bullish change of character. So what I've been studying is this. Hey, the change of character happened on the inside internally before, I mean, not the change of character, the reaccumulation happened internally before the change of character. Okay, I'm looking at the market coming back down and creating a higher low and going bullish. I'm looking at a change of trend. That's what I've been studying. Now I know it's not 100% bulletproof. Nothing will never be 100% bulletproof, but my anticipation based off my studying and my journaling that, hey, since this reaccumulation is on the inside of the change of character, I'm looking for this to create a higher low, accumulate off it, go bullish, break the structure, create a new high, and start as a bullish trend. That's my anticipation. So we'll see what's up when the market opens up. All right. So let's go look at Biddy. Let's go look at Bitcoin. Divergences, divergences, divergences. I'm talking aloud. Ooh, let's see what's up. They've been sitting right here for a while because it wants to be I know it wants to be a distribution, sitting inside of a distribution schematic for this to push up and possibly come right here. As you can see how this thing is diverging right here. It just hasn't changed character. But I'm looking for the market because I can see this being a distribution. I'm looking for the market to actually come to this particular level right here and sell off. And look for a miniature distribution on a lower time frame. So it's a daily supply zone. All right. And so what I see is preliminary supply. This being the buying climax, automatic reaction, secondary test, minor sign of weakness. This breaking up above here, creating the up thrust. The market goes down to respect the demand zone of the minor sign of weakness after it creates the up thrust. And then I see the market pushing back up here to this level to sell off. So I'm going to put a horizontal ray right here. And that would be a long-term trade, obviously, because it's on a daily. That'll be a swing trade. And so make a daily alert and say, hey, daily supply zone. Daily supply zone. Oops. Daily supply zone. Boom. Got it. Bam. Now I don't have to worry about missing out on a trade. So I got it set up. I got the alert set. I got the alert set. So when price come out at price had to go hit $102,984.58. I'll be going on a lower time frame and looking for a smaller bearish divergence and change of character. And then I gotta let it change character. I have to let the market change character so I'll be able to forecast, be able to see what it is that I'm looking for. All right. So that's Bitcoin long term. On the M5 time frame, you got smaller divergences, right? Right here, you got smaller divergences. But like I said, it's creating. I understand that it's in a phase B of a distribution schematic, and I'm anticipating a distribution schematic number 2. So feast your eyes on how the market created this preliminary supply and it's created this W between the buying climax, automatic reaction, secondary test, minor sign of weakness, up thrust, comes back and respects the demands on the minor sign of weakness, and now it's creating this sort of a bullish triangle to go up like this, and I'll show you on the diagram to come up here and then sell off. Come up there, sell off at least minimum to this particular area right here. at least minimum to this particular area right here. Minimum. I don't know what's going to happen, but at least dropping back down to 77,000. Okay. I'm calling it like I'm telling you, I'm calling it like it is. What I'm saying is, I'm looking at it and I'm thinking by the way that I see the schematic and by the way everything is printed, I'm thinking that the market will come to this area, sell off, and shoot down here to the $77,481.12 area, in between 74,000 and 77,000 minimum. Minimum. I don't know what it's gonna do, but that's just me forecasting. All right. So you see how the market created this W between the buying climax, automatic reaction, secondary test minus sign of weakness, breaks above the buying climax, creates the upthrust. The upthrust comes down, respects the minus sign of weakness, and then it creates some sort of a reaccumulation to push back up here. Right. So you see that. Watch this diagram that I pull up. Watch this diagram that I pull up. Let's see. Bam, there it is. So here's the deal. This right here, this exact screen right here. So right here on the top right and bottom right, we have a distribution schematic number 1 and distribution schematic number 2. What I'm seeing is a distribution schematic number 2, where you have the preliminary supply. Now look, you see the buying climax, automatic reaction, secondary test, sign of weakness, minus sign of weakness, and there's the upthrust. There's your W. Buying climax, automatic reaction, secondary test, minus sign of weakness, breaks above the O high, creates the upthrust. Now the upthrust comes down, respects the minus sign of weakness, demand zone, right? And it's starting to push back up. So we're right here going from phase B, transitioning into phase C. And right now, you have an unmitigated bearish engulfing candlestick that's right here in between the drop of the upthrust and uh, attempting to create this complex pullback to get back to do what? Mitigate that bearish engulfing candlestick and then do what? Sell off from here and continue the sell to the downside. So we're looking for the long terms. In my long term, we're looking for that market to pull back up and create that last point of supply. Make sense? Makes sense to me. That's what I'm forecasting and that's what I'm seeing. All right. So that's long term on Bitcoin. Looking for Bitcoin to reaccumulate, come up here, smack this supply zone, create a smaller distribution on the lower time frame, which I would look for my divergence and change of character on that lower time frame, and then boom, sell off from here and come back down to at least to the between 74,000 and 74,598 and 94 cents to 77,481 and 12 cents, somewhere in that particular area. Long term, baby. Long term. So if I wanted to, I could be looking to take buys out of this particular area and wait to get to the buying zone and then look for uh bullish divergence and change of character. You got an unmitigated candle right here. So I'm thinking that the market may, where it's currently at, it may sell down and pick up this imbalance on the M15. Because this right here is a divergence and a change of character. See? Slanting lower. And then this is slanting upward. And then midpoint right here is a change of character area. And so, bam, here's your change of character. All right. So I would look for price. My anticipation is that price sells where it's currently at, and then it comes down to this particular level to buy from. Because I think everything else is mitigated. Other than that, everything else has been touched and mitigated. Other than that, so that's just the anticipation. That's a divergence and change of character. See, it's easy to spot them, develop their trader's eye. So now you got this diverging and changing character, right? This is a divergence and change of character right here, a bearish one. This is a bullish divergence and change of character. So now the market did what? This low right here led to what? This pivot, this high, right? Then this came down here, led to this low, and now pivoted, changed the character. Now did what? Now you have a break of structure, internal break of structure right here. Now you got a BOS on M15. All right. So now this low led to what? This particular high. All right. And so we sit and wait. Seems like it's attempting to diverge, change character on M1. Look at it. Slanting lower. If it breaks above here, that's a change of character. You got this slanting lower. And divergences are market structure. Divergences are market structure. So you can map up divergence, and then see what the market is actually attempting to print. That's what you can do. So if the market breaks above here, it's a change of character. It's not official yet, but it'll be an M1 change of character. And it depends on what prints. How is the reaccumulation going to print on the inside of the change of character, or is the reaccumulation going to print external on the outside of the change of character? We don't know until the market comes out and prints. So look at it. Boom. You see how the market, look at it. Slanting lower, slanting upward. Like you can scalp this. Absolutely 100% scalpable. Nothing says that you can't do it. This right here, bearish divergence, change of character. Depends upon the trader. Bullish divergence, slanting lower, slanting upward, midpoint, change of character. So this low led to this high, bearish divergence, change of character, led to this low. You got a wave 1, wave 2, wave 3, 4, 5. Hey, I'm telling you, it's readable. It's readable. So that's pretty much what all I'm gonna go over for today. I'm not looking to take a trade. this particular evening. I'm gonna just be disciplined and patient, and wait for the market to open back up tomorrow. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated. I will never ever take it for granted. Have a safe, pleasant, productive rest of your super, super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many, be the one. Uh Before and also concluding, let me let you know that the average millionaire reads two or more books a month. Is that is if that is your aspiration, your personal goal, dream, desires, like such as mine, be a millionaire, billionaire. I've already read two books, began reading two books, and completed them uh, last month, January. So now, a new personal record. I've read two books already, and I began reading a third book. Began reading the third book. So I have already I have already completed reading for this month Rich Dad Poor Dad and Rich Dad's Cash Flow Quadrant. So let me go get the book. See what it looks like. So, like I said, I've already completed reading two books this month. Just been grinding and committing to myself, committing to the grind. That hey, by the end of this year, I will have 24 minimum 24 or more books read. But I'm not settling for 24 because that is a 70, and that is average. So I'm not settling for that. Continue to reading, continue to learn, continue to adapt, continue to grow. Because if you're not growing, you are shrinking. If you're not in grade school or in college, how are you continuing to learn and grow? How are you continuing to adapt and evolve? You got to read. So, you got Rich Dad Poor Dad, right? Got Rich Dad Poor Dad. This book, very very great book. Number one personal finance book of all time, and it has a bonus excerpt for the cash flow quadrant in it. But Rich Dad Poor Dad itself has 292 pages. Okay, 292 pages. And then you got Rich Dad Poor Dad. All right. And then you got Rich Dad's Cash Flow Quadrant. It shows you the four different ways we can produce income, being employees, self-employed, business owners, or investors. And you can actually produce income out of all four simultaneously. It is depending on you. It's a personal preference. But what he's saying is you'll find more financial freedom on the right hand side of the quadrant, being a business owner and an investor, as opposed to the left hand side of the quadrant. You'll find security. You'll find financially freedom on the right side of the quadrant, being a business owner and investor, but you'll find security on the left hand side, being employee or self-employed, because their mindset on the left hand side of the quadrant, people's mindset, it's security. Security is a priority. Financially free isn't. Financially free and independent isn't a priority on the left hand side of the quadrant. But security is not a priority when it comes to the right hand side of the quadrant. The priority is financially free and independent, thinking of business owner and investor. So what he's saying is he recommends that people have their money working for them, because you're going to get to a point where you're unable to perform manual labor income, earned income, and things are gonna happen in life that uh, takes your focus off of making an income. And why does your income have to be the sacrificial lamb? Because I have to go help a family member, because I have to go help a friend do something, and your income is the sacrificial lamb every single time. Or a child has a sporting event or graduation or a ceremony that you want to attend, but you can't attend because you tell them, I gotta go to work. I can't, I have to go to work. That is demoralizing to that child. So what I suggest and what I'm studying is to become an investor, right? So like I said, these two books have already been read. Completed them yesterday on Valentine's Day. I take my books with me, take my books seriously um, when I'm at my day job. But now, so I began reading this book right here, How to Create Lifetime Cash Flow Through Multifamily Properties by Rod Cleef. He's a real estate investment expert. He's been doing this for over 30 years. I think like 39 years to be exact. And so is a 90-day action plan included in the book. Um, this is a second edition with bonus content. I don't have the first edition. I don't even know what the first edition looks like. But I mean, so far so good. I'm in chapter 5. What it says, how to understand real estate or understanding real estate. And so what he's suggesting is this, because when there was the great recession in 2008, and he was investing in the real estate, he was investing into single family properties. His focus was more of property value over cash flow. He was prioritizing the value of the property as opposed to prioritizing cash flow. Now that he's been through that, he's saying that, hey, I suggest if you're going to be in the real estate game to be investing into multifamily properties and make your priority cash flow. Make your priority cash flow as opposed to the value of the property being your priority. The value of the property being your priority, in his experience, is that in 2008, when the Great Recession happened, the real estate market crashed, and uh, he wasn't making hardly ever income, from his investment properties. So he said, okay, I made the pivot to do and focus on multifamily properties. And when, God forbid, another recession hits, I will still have, my cash flow coming in during during the Great Recession, right? So this is a book I'm reading right now. I'm learning how to do that, and learning how to become an investor through multifamily properties. It gives you, like I said, the action plan in the back of the book, inside of the book, 90-day action plan. Gives you scripts on what to say, how to say it, who to say it to, and yeah, very great book by Rod Cleef. I'm enjoying it so far. The New Rules of Real Estate Investing. The book that I believe I'm going to read after that, I don't know. I haven't decided. I got some options. But that's all what's currently happening with me right now. So, love everyone in life, and I'll see you all on the next session. We're going to have a safe, blessed, productive day and week ahead in the market and in our personal life. Y'all take care.